You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again. It is Monday time for the Crypto Rundown, the program where we break down all the action lighting up the world of crypto derivatives and indeed beyond. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging, the network that 18 plus years in, continuing to grow at an exponential pace. 3 new shows in the last, 8 months, 6 months. It's been wild, including the newest one hitting the network last week, the Hot Options Report. So for all of you out there who've been asking us for a daily bite at the data apple to see what are the hot options of the day, you're getting that. So make sure you're subscribed to the full network or checking us out wherever you get your favorite content or your favorite social platform. YouTube, it's available pretty much everywhere. Content is available these days, including a lot of crypto breaking into the top 10 in the world of options these days. So if you're a hardcore crypto fan, a lot there for you as well. As we see who's joining us on the old program this week, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up is a return offender to the hot seat, even though it's been a while since we've checked in with him. This is Brandon Mulvihill, the CEO of Crossover Markets, and we haven't checked in with them since it's been a couple of years, since May of 2023, so a lot to catch up on. Brandon, welcome back to the Crypto Rundown, sir.
It's my pleasure. Happy to be back as you put it, an offender. Excited to join.
It's been so long since we talked with you. The last time we chatted with you, FTX was all the rage. So a lot has gone on in the crypto markets since then. But speaking of which, obviously a lot of new listeners have discovered the program since the last time we chatted as well. So let's start really quickly. Give our new listeners a bit of an overview. What the heck is crossover markets? What do you guys do?
Yeah, certainly. So, look, for all the listeners out there, Brandon Mulvihill, I am the CEO and one of the three co-founders of Crossover Markets. Myself and my other two colleagues are ex-TradFi guys. I was in the foreign exchange market for 20 years, mostly in brokerage. And as was my colleague and co-founder, Anthony Mazzarese, and our CTO, Vlad Ryzen, our third co-founder, is quite a meaningful part of our story. He has built and operated and sold trading venues in multiple asset classes. Most recently, he built an FX venue called FastMatch, which sold for $180 million to Euronext. And so, what are we up to at Crossover is we felt going a few years back, when we looked at our original thesis, we felt like that the market needed to mature on the institutional side. And we felt that if you look at every other asset class, generally speaking, there's a race to primary market, where you have a platform that's not counterparty to trades, right? Where the marketplace is competing for market share, not necessarily for customers. And so that's what we've done. We've done two kind of, I think, really differentiated things in the space. The first thing is we built a platform called CrossX, which is execution only, meaning we're not counterparty to trades. In fact, we don't touch the coin. Our clients pay commissions at the end of the month. Our clients are all institutions. And the second thing we did is, as you will know, Mark, every crypto exchange you can think of is operating a central limit order book, a CLOB execution model. Not surprising, it's the easiest style of execution model to build. That's why we have hundreds of them. But no one had ever built an ECN. And so CrossX is the first ECN into the spot crypto marketplace. And for listeners who may not be familiar with the distinction between the two, in a central limit order book, you effectively have one pool of liquidity and one market data. In our setup, what happens is every new customer, every taker of liquidity has their own market data and their own pool of liquidity so that the liquidity and spreads are tailored on a per user basis. So that's the thesis. That's the idea of Crossover. We have been live now for 2 years, and I can certainly go through some of those stats, but at a high level, our aim is to put our hand up to try to become a primary market for things like price discovery and risk transfer.
You mentioned you folks have been busy since the last time we chatted, adding a lot of new wrinkles to the platform. One of the frequent complaints we've had from a lot of our listeners and a lot of our guests, I mean, our guests come from all over the world on this program and have been since day one. Part of the reason for that is that the, shall we say, regulatory framework here in the US, a little bit unclear, a little bit uncertain. There have been some changes on that front. We'll get to that fun in a second, but it seems you folks over there at Crossover have been busy taking advantage of that with a new foray into the US. I know this will come as music to the ears of a lot of our US-based listeners. What are your plans for the US market in particular, Brandon?
Sure. So we have 86 institutions now live and trading on the platform. They're all internationally domiciled. And for a company that was founded by 3 Americans who reside in the US, obviously our ambition is to occupy a spot in the US market. And for reasons that probably won't surprise any of the listeners, in the past regime, pre-Trump, the marketplace was just rather hostile, right? And so we took a conscious decision to sit out of the US space. And now everything has effectively changed overnight. And so we're feeling a lot more comfortable coming into the US, which we're doing. We're onboarding customers here, institutional customers in Q3. And so we've started that process. But the big thing that's happening is the market structure bill, right? And I have personally been on with the House Financial Services Committee, House Ag, Senate Banking Commission. The bill has seen a few revisions already. I think this is going to be the singular most important piece to institutional trading in the history of spot crypto. What this framework does at a high level is it provides a self-registration process such that institutions can operate on a national level without the concern on the state-by-state concepts, which everyone I think is familiar with, the MTLs or or in New York, for example, the bit license. And so this kind of framework really mirrors what everyone's accustomed to in other asset classes, and it really just paves the way for a proper regulatory framework to come, which we think is great for the market because we think more and more institutions will get involved. And at the end of the day, competition, we think, is what's best for the clients.
It's funny you mentioned that market structure bill because you're right. Last week was crypto week here in the US. A lot of legislation coming to the fore. It seemed like the Genius Act really stole all the thunder. That's all anybody could talk about. It certainly on the wake of the massive success that has been Circle. Everyone was fixated on that. The plumbing side, the market infrastructure side, not quite as sexy, Brandon. Didn't get all the headlines out there. But I think for guys like you and for a lot of the institutional players, that was probably the more meaningful piece of legislation. It certainly sounds like that's your view, Brandon. Genius Act is cool, but it was the plumbing that really paves the way for the future growth.
Yeah, if that's exactly right. I think the stablecoin, obviously, we're going to champion that. It's also a fact that the stablecoin bill was just much further along, right? In many respects, it's a much simpler thing to get done. Market structure is encompassing quite a few different things, right? It examines companies like ours, which would be considered a digital commodity exchange or a DCE. It's looking at the brokerage, it's looking at market making, right? So there's just a lot that has to be discussed and unpacked. But it really, one thing to consider, and this is how we view the crypto space, crypto exchanges, when you look at the exchange, they're not exchanges at all. They're brokers, right? And some are retail brokers who have an exchange, some are institutional brokers who have an exchange, some are business models that are offering their exchange, their brokerage model to both retail and institutional. And that's fine, but what's missing is that interbank or interdealer level, that high level of an institutional platform, such that where a bank or a non-bank market maker or a hedge fund or asset manager can trade, can effectively custody with institution A, have a PB or clearing relationship with institution B, and then can access liquidity destinations, 10, 20, 30 of them, while net settling in one spot. That's the space that we think is maturing, and that's the space where we expect volumes to grow exponentially. But in order for that to happen, in order for it to be possible, we need this market structure framework, right? This is the framework that if you look at, for example, banks, if you look at the traditional exchanges, I'm talking about CME or ICE or NASDAQ or TradeWeb, you go right down the list. If you look at some of the big hedge funds who have not yet entered the space, it's really this framework that they're waiting on. And I think once this framework comes out, notably with the market structure bill, once that gets passed, and we're hoping towards the end of the year, I think we're going to see an absolutely new wave of financial institutions participating in the space.
Speaking of a wave, it's been quite the wave, really, post-election. Everything we're seeing in crypto week this week is the climax of all of that impetus that started back last November. We started seeing an uptick in institutional interest almost immediately after the election. It seemed in many ways it was going to be Wild West for a little bit on the regulatory side on the crypto front. But at the end of the day, some progress is progress at the end of the day. Would you say, Brandon, that some of this interest we're seeing now, did this really kick off for you guys post-election? Is that really what started really prompting a lot of this institutional demand? Because at the end of the day, the notion of institutional demand for crypto has always been a nebulous prospect. We've been trying to come to grips with it on this show for over half a decade now. What does that really mean? What is the institutional demand for things like Bitcoin and ETH? Does it really just ebb and flow with the price at the end of the day? So we've seen a lot of, it seems like an upswell of interest post-election, certainly crypto week putting the exclamation point on that. Has that been your takeaway as well? Really building on the election has been an uptick in institutional demand on your side, Brandon, maybe culminating in what we saw this past week?
Yeah, I simplified it even further because there's no question. There was life before the election and then life immediately after it. And we started the company in March or April of 22. Did our first fundraise, started the fundraise in June, and that's when Three Arrows and Celsius collapsed. And then, as you said, months later in November, FTX collapsed. So we've only ever operated in the dead of crypto winter. We've done both fundraisers in the dead of crypto winter. We've lit up a platform in the middle of crypto
So
winter.
what you're saying is you have terrible timing, Brand, is what you're telling me.
Yeah, I would actually argue beautiful timing, right? Because I think in the previous chapter, that was the era to build, is while everyone else was sitting on the sidelines because the price action wasn't as sexy, that was the perfect time to be building and being prepared so that when the market turned as it did, that you're ready to go, right? And you can now we can see this with we're experiencing a 500% growth rate in trade count and over 100% in trading volume year over year. The thing I would highlight is, again, think of us in a sense as like a fintech company, right? Because again, we don't touch coin. We're not counterparty to trades. We're an execution venue. We couldn't get a bank account, right? This debanking thing that people have talked about on numerous podcasts was a real thing. It was a real issue. It was very challenging to get just an ordinary bank account. And all of a sudden, the election in November occurs, and two, I'll call them tier one household name banks immediately sent emails to us saying, hey, we'd love to have your banking business. And all of a sudden, banking is back overnight. And I think that's just a microcosm of really what happened, is that financial institutions that are heavily regulated around the globe were scared because of the banking. I know a lot of online brokers, for example, in Australia and Singapore and Japan and among other areas, that were just scared they would lose their fiat rails. That risk started to go away overnight. And then the other thing that happened is there was a lot of growing confidence that a regulatory framework would actually come to fruition, which is giving a lot of financial institutions to enter the space. So yeah, it's been night and day since the election.
And I've often joked on this show, at the end of the day, you want to gauge what institutional demand is for crypto. Just look where Bitcoin is. And if we're at or near all-time highs, the institutions are intrigued. And if we're at the lows, they're less intrigued. Again, it's a joke, but it's only really half a joke. It does seem like the institutional interest in this space does ebb and flow with the price action of the leading asset. What do you think, Brandon? Is that too reductive? Last week, we just blew past 120,000. For the first time, I have to imagine maybe a few more firms were dialing up you guys last week than the week before, Brandon.
Oh, yeah, that's definitely true. The pipeline's not only has the pipeline grown, the speed to onboard has been expedited because folks want to get in. I think that what you're saying is slightly reductive. I think it's completely accurate if we're just talking about interest, right? And so if we're talking about a financial institution who has not been in the space, if the price goes up, are they more interested? Absolutely. Now, what price action doesn't necessarily do for all of us is it doesn't necessarily change behavior, right? And what's lacking on behavior with the folks that are still not in and participating is in fact market structure. And I'll give you a couple examples. There are some financial institutions that will use, let's say, a Bank of New York or State Street, right, as their custodian, right? Now, they might be trading fixed income or FX or equities or in various different things, but they're using that custodian for all of those services, right? And they're just not comfortable opening it up or getting into crypto, where now they have to have a crypto custodian that they're just not, it's just so foreign to them. That's not something they're ready to do. And so one of the big themes, I would say, outside of regulation, probably one of the biggest stories is the fact that Bank of New York and Citibank and State Street have all come out saying they're going to custody crypto by 2026, right? So this is monumental, right? Because now it ticks a huge box that I think is going to have a huge unlock for a lot of these folks that still are on the sideline. And the second thing, too, is fungibility, right? And I mentioned fungibility because it's the credit and the way folks access liquidity in crypto. If you look at the credit side of things, it's been lacking for so long, right? The lack of fungibility, this captive broker or exchange model that exists, what it's doing is it's also holding the fees captive. So the numbers I always like to use is if you look at a firm like Citadel Securities, in foreign exchange, for them to access liquidity from a credit perspective and execution perspective, a firm like that is going to pay between $3 and $6 a million, something like that. But that's the all-in rate for execution and clearing. And yet in crypto, that fee could be hundreds of dollars a million. And I've seen some institutional offerings that are $1,000 a million plus. And so I don't care what model you have, when you go into the spreadsheet and people are sitting here going, where's all the volume? There's a ceiling on volume currently in the space simply because the fees aren't going to allow more. Right. And so the second story, I think that's huge. And I know M&A and IPO and all this stuff is on everyone's mind. Next to the custodial piece, I think one of the most underrated announcements was the acquisition of Hidden Road by Ripple. Right. Because Hidden Road is the one that's been leading the charge on the prime brokerage side and offering real fungibility institutions. And now they've been acquired, and the expected balance sheet of that institution is now going to increase exponentially overnight, which is going to free up limits. And I think you're just going to see a snowball effect with that business model. We'll get copycats, and which I think will be healthy for the space. And so that's a long-winded way of saying, yes, Bitcoin goes up. We see it. Institutions get a lot more excited. They want to talk. They want to phone us up and have a conversation about what life could look like if they enter the space. But without the custody piece, without fungibility, without the market structure rails in place for these guys to behave the way they do in other asset classes, that interest doesn't always change to translate to behavior.
I'm glad you brought up the fees, because you're right. The crypto market is charitably decades behind the traditional equities of the options market when it comes to that side of the space. I know, again, it's not the sexiest thing. We're talking infrastructure, we're talking plumbing, we're talking fees, listeners, but we see it all the time here, Brandon. We have new listeners coming into a show like this, and maybe they're migrating from more established asset classes like options, and they start dabbling on Coinbase to start picking up some Bitcoin or some ETH, whatever it is, and they start seeing the fees to transact. They're stunned. And they start looking at the spreads, they're equally stunned. And then even simple basic things like you want to stake maybe some ETH to get some yield. And then the fees associated with that are just outrageous. You don't see a lot of brokers in the traditional stock world charging you to collect a dividend. Yet that's effectively what we have going on in the crypto space. So there is a lot of work to be done. So again, not the sexiest stuff, Brandon, but I think if the crypto space can spend the next year or two really maybe catching up on some of these, you're right. These fees are they are legacy fees, I think, to put it mildly. I think that would go a long way towards expanding the popularity even more, Brandon.
That's right. They're legacy fees attached to legacy business models, right? And this is the point I'm really trying to drive home with folks is it's not a zero-sum game. Our forecast is not that our operating model in conjunction with the banks getting into custody and Hidden Road and others potentially providing actual prime brokerage where there's real fungibility, where what I mean by that for folks listening, an institution can come buy Bitcoin dollar on our platform CrossX, and 30 minutes later, if they want to exit their risk, they are not obliged to do it through us. They can do it through any liquidity destination that Hidden Road gives them access to. So I don't own the customer. I'm not in control of the customer. I've got to win that customer's business by trying to be the best price at the moment in time that they're trading, right? So it's really, and that's why we're so nerdy about the value of our tech and matching trades in microseconds and having throughput to handle 1 million orders a second. It matters when you don't control the client. If we look at the legacy systems, what they are, these are brokerage models, right? And I've always said this, Coinbase is not the CME, it's Charles Schwab. That's the business that it's in, right? And it would be really odd, I think, to folks if they thought for a second and said, wait a minute, when banks trade cash equities all day, they're not hedging their risk with Charles Schwab. They're not hedging risk into Robinhood or Interactive Brokers, right? Because there's an institutional marketplace with ATSs and dark pools that allow them to generate price discovery and risk transfer. And similarly in foreign exchange, you have prime brokerage, right? And you have ECNs, and you do have some central limit order books, right? But you have that credit and fungibility to trade across the street. This is the missing ingredient in crypto that's been changing, and we think it's going to unlock all kinds of value. I can give you a data point, Mark. If you look at centralized exchange volume, it's been stuck in this range between 500 billion to 3.5 trillion per month. And if you go back to the November, I just found this so fascinating. You go back to last November, so Trump wins the election, right? There's a lot of momentum, a lot of positive energy in the space of digital assets. especially the idea that regulation is going to come. Bitcoin also, if folks remember, that's the month Bitcoin crossed through 100,000, which psychologically is an important figure. And the market was rocking. The high fives are everywhere. Everyone was smiling across the street. We've gone from almost from winter into summer overnight. And yet, what was the total volume? The total volume was 2.7 trillion. Total volume did nothing special, right? And the reason is it's the market structure that has put a ceiling on this. And so the only way we get fees lower, right, is to adapt market structure, right? And so we go down to a half a basis point for folks to trade on our system, right? I run a business model. We've got 12 people, 12 employees. We'll have a 13th starting in August. I'm running a business model where I don't touch client money, right? I'm not going to have big capital adequacy across the globe from a regulatory perspective. I'm just not an expensive business to run, right? And so we can be very painful to folks out there in terms of lowering fees, and certainly from a technical perspective, collapsing spread. So the fees have to come down for sure, but it's the underlying market structure that has to enable that ability. Otherwise, the options for institutions are these captive business models. And it's not surprising to me, we saw Coinbase buy Deribit. What does that allow Coinbase to do? It allows them to continue to keep clients captive in their brokerage account. Now you can trade options, you can trade spot, you can do the perps, but you're going to do it here. And if you buy Bitcoin with me, you're definitely going to sell it with me. And that's why they're able to maintain the fees where they are.
A lot of room for hopefully potential disruption on the fee side. Maybe this market structure bill will pave the way to that. So hopefully, listeners, some fee relief coming your way sometime in the future. We raised a lot of good points. Unfortunately, we're already coming up against it with this segment. We have to keep on rolling with the show. But you did touch on something I want to hit on really quickly, which is, of course, the just amazing amount of M&A that's been going on in the space, certainly since the last time we talked to you. And indeed, just in the last few months, we've seen a lot of action that is very much near and dear to our side of the space, which is, of course, the derivative side of the space. You just talked about Coinbase picking up Deribit when we've been talking Deribit volume and Deribit skew and Deribit volatility on this show since this show launched. We've been the only ones doing that for a long time. So Deribit has been the go-to source for crypto derivatives volume, not so much here in the US, but for around the globe. It has been the gold standard. Now part of Coinbase, obviously the big dog on the retail brokerage front when it comes to crypto. And then getting even deeper in the weeds, we have, of course, Kraken coming along and picking up NinjaTrader, who is also making a big foray into the crypto derivative side of the space. So I guess, Brandon, it seems from our perspective, certainly the crypto derivative side of the space, potentially an exciting side to be on in the coming months. Brandon, what do you think?
Yeah, just in general, people are facing an existential threat, and it's flushing out M&A. And I think when the market structure bill passes, we're going to see more M&A go absolutely bonkers, right? And what's happening, Coinbase crossed $100 billion in market cap last week, trading at 75 times earnings. If you look at Robinhood, it's trading at 60 times earnings, but its old peer, Charles Schwab, is 27, right? And so people who have not been in crypto, the TradFi firms need to come into crypto, and they're largely going to do it inorganically. If the previous winter I said was the time to build, this market environment, if you want to get in and you haven't been in, it's the time to buy. Right? That's the reality of the situation, and that's what's driving this. And crypto firms, you're exactly right. Kraken is trying to look to offer multiple asset classes and TradFi businesses to their platform. I thought the NinjaTrader deal was absolutely phenomenal. Thought it was really smart. I don't think this is slowing down anytime soon. I talked to a massive online retail broker in Europe, who's one of the largest in the region, and the crypto firms have scared them. Right? Because these crypto firms have generated so much cash and so much valuation that they're worried about these firms' ability to come into their space and push them around, right? And so they are actively looking to go buy a business of their own, right? So I think it's now, to your point about crypto derivatives, here's what's happening. It's not just derivatives. You go to page 1 of an economic book, it's all about scarcity, right? And if you look at the monopoly board of which properties are available for inorganic growth, there's not a lot on the board. Mark, you guys have been covering Deribit. I bet in part, one reason you covered Deribit all these years, what else are you going to cover? right? So if you
there
wanted
were
to
a dearth of options. That's true.
Yeah, if you wanted to buy Deribit and you didn't get it, what's your backup plan? If you wanted to get into PB space and you didn't get dibs on Hidden Road, what's your backup plan? If you wanted NinjaTrader and FCM with a phenomenal platform and automated trading, like what's your These properties are going and they're going fast. And I'll stick with the monopoly theme. If you want to get Boardwalk and Park Place, you got to go get them now, because once the market structure bill happens, these properties are going to go and people be left with those dark purple Baltic and the Mediterranean or whatever it's called. And that's what's happening. I think when the market structure bill comes out, I'll come back on the show. We'll see if I'm right. Give me about 4 months after that bill. I think M&A is going to go absolutely wild. There's way more buyers than there are proper businesses to be bought. Look at custody, Mark. How many banks want to get into custody? How many businesses are there to go buy? Right? It's just the numbers, and that's in part the scarcity is driving up these valuations. It's fun. It's going to be a fun 12 months here.
Speaking of scarcity, we pretty much run out of time on this segment. I appreciate you joining us for your approximately every 2-year check-in, Brandon. So I'll have to bring you back on more frequently than that once all this market infrastructure, once all the I's are dotted and T's and crossed, we could get into the weeds in a little bit more detail. In the meantime, Brandon, if folks are intrigued, they want to check out what you and the team have cooking over there at Crossover, where should they go? What should they do?
Yeah, go to crossovermarkets.com, or you can go to Crossover Markets on LinkedIn and find us and communicate with us.
There you go. Crossover Markets, listeners, spelled just like it sounds. I appreciate you joining us, Brandon. Again, we'll have to check in more frequently than once every 2 years to see how all of this plumbing unfolds in the marketplace in the coming months.
My pleasure.
All right, everybody. Now we have to keep on rolling. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do just that. We break down all the action in the world's leading digital asset. Yep, we're talking the big dog, which is Bitcoin. By the way, how cool would that be if everything we just talked about came to pass? Not just the M&A side, but hopefully lowering fees for everyone out there in the game. The crypto market can go a long way towards making some progress on that front. So I know a lot of you will be excited to see that. Are you excited to see the price action in Bitcoin this week? I guess it depends. If you like Bitcoin selling off nearly 2,500 handles, then I guess the answer is yes. But still flirting with that 120K level as we kicked off the show, 119,818 to be precise. Like we said, down about 2,500 handles from where we were this time last week. Of course, last week blowing past the 120,000 level, getting up to around, I believe, 123 and change, just setting new all-time highs. A good time out there for the holders and for the Bitcoin fans out there, listeners. Let's look at the vol. Remember, all this data coming at you courtesy of our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. And as we were just saying with Brandon, all this data is coming from Deribit because they still have been the big dog. That said, the preponderance of the iBits and others out there are making some of this vol and skew a little bit more accessible to the rest of you out there. But let's kick things off on the weekly vol front, listeners. We've been saying for a while, not exactly a sexy time on the Bitcoin vol front, and that is the case again this week. We were nearly a 40 last week, 39.75 on the weekly vol, coming down to about a 35.5 right now. So again, looking fairly cheap, so things can stay cheap for a while, so sometimes it is good to sell vol in low vol environments. Just remember, make the juice worth the squeeze. Don't give away risk for nothing out there in these types of environments. Listeners, in terms of the monthly vol, a more standardized vol metric, 37.3 right now. That is down from about a 38.15 on the show last week. And going out to where the holders hang out, 6-month vol, 43 1/3 last week, 44.5. So actually ticking up a little bit on the 6-month vol front. Skew wise, what is the skew telling us right now in Bitcoin? And the answer is not a heck of a lot. Last week, the weekly skew was a -2, which is, again, we had just come off those all-time highs. So that skew on the weekly front is a little susceptible to the swings intraday. Coming in right now, it is almost literally flat, about a positive 0.25. So not much going on the weekly skew front. Same deal on the monthly skew front, -1.2, which is pretty close to flat, but slightly bearishly biased, obviously, last week. It's a positive 2/3 this week. So again, mostly flat and going out to where the hodlers hang out. 180-day vol, 1.5 on the show last week, and about a positive 2 right now, ticking up ever so slightly on the longer term skew front. And what is continuing to tick up from a volume perspective, if not from an underlying price perspective, is our old pal IBIT. When we kicked off the show, IBIT was hanging out at a 67.20. It puts it down about exactly a point from where it was this time last week. It has continued to sell off during the show. It's down to about a 66.40 right now. So that puts it down about 1.8 handles from where it was this time last week. So giving up a little bit of the ghost out there. Volume-wise, it is continuing to grow, though. 634,000 contracts. That's up nearly 75,000 contracts a day from this time last week. So that is starting to get pretty active, listeners. We're talking VIX is right around 750,000 right now, so we're within spitting distance of that ADV in IBIT. That's wild to say that. I don't think anyone expected that when we were first seeing the ETFs approved, a year and a half ago now? And to see all this options flow that has come in after that, once the approval hit. Wild times out there. In terms of action today, we got a pretty action-packed day, listeners. Already past that ADV, 667 on the tape in IBIT today. You might be asking, what is the big dog in IBIT right now? It's the 68 calls expiring this Friday. That is like clockwork these days. Everything's expiring at the end of the week. Once we start adding these 0-day single name equity contracts, I have a feeling it's going to be everything expiring that day, just like the indexes right now. But 42,000 of these 68 calls going out this Friday. By the way, that was all opening papers. That's new paper. If you're wondering what is a 68 call trading for right now with IBIT right around 66.40 with about a week to go, they got as high as about $1 this morning, 101 to be precise. Looks like the low was about 61 cents. So 40-cent range intraday. Again, we did see some decent price action in IBIT, but still not exactly cheap out there. Would you be a buyer or a seller in that price range, listeners? I'm curious. Hit us up. Let us know. The vol continuing to come in at about a 39 on the 30-day vol front, down about 2 points from where it was this time last week. Heading out to where the degenerates like to hang out, listeners. Of course, we're talking MSTU. A 960 when we started the show. That puts us down about 70 cents. As the show has continued, we've sold off to 930. That means it's down exactly $1 now on the show. So MSTU coming back to earth a little bit. Putting up some numbers today, 29,000, but that is kind of light. That's back to the old days when we were first joking about MSTU, even though the ADV is 50,000. So it has been putting up some numbers, just not exactly today. If you're wondering what is the big dog out there in MSTU today, it's the 10 calls expiring this Friday, going up 2,360 times. Looks like price range from about 30 cents on the upside and about 20 cents on the downside. So about a 10-cent range out there. 10 calls expiring this Friday between 20 and 30 cents. Let's just call it 25 cents. Split the uprights. Are you a buyer? Are you a seller, listeners? Hit us up. Let us know. As we keep on rolling, it is time to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's find out what's popping off in the rest of the altcoin universe, shall we? It cost you, let's see, what does it cost you? Last week, it cost you $26.1 billion to break into the top 10. This week, substantially more, nearly $30 billion, 29.8. Man, that is a huge change. We were right around 10 billion not that long ago. So you're talking roughly 3x the cost to break into the top 10 right now in the crypto market. So wild times out there. Last week, it was Cardano holding down the number 10 spot. This week, it is Tron, 29.8 billion to be precise to break into the top 10. Number 9, our old pal Cardano, slotting up one slot this week to about 32 billion worth of market cap. Number 8 is Doge, 42.2 billion worth of market cap. Number 7, USD Coin, 64.5 billion. Number 6, it's Solana, 105.6 billion. Number 5, it's BNB, 108.9 billion. Number 4, it's Tether. Yes, I said number 4. it's Tether. How long, listeners, have we been saying number 3, it's Tether? It's been like clockwork. I can't remember when we first started saying that. It's been so long. Tether has been locked at the number 4 spot, or should be number 3 spot. This week, kicked to the curb, down to number 4, 161.7 billion. What has the temerity, the gall, the hubris to kick Tether down to the number 4 spot and to claim the number 3 spot for its own? Let me just put it this way. Bill's wife will be happy. Yes, it is XRP coming back to life. 213.8 billion worth of market cap, man, after languishing 50 odd cents forever. Looks like roughly 7x that now. So a nice little move out there in XRP land. Number 2, of course, it's ETH. 458 billion worth of market cap. I see a lot of you talking about ETH in the chat. We'll get there, don't worry. And then number 1 with a bullet this week, listeners, Bitcoin hanging out 2.35 trillion worth of market cap. All right, let's keep on rolling here, listeners. Out to the land of ETH. Remember, you can check out this data for yourselves if you are so inclined. amberdata.io, the place to go to kick the tires and light the fires. ETH, as we kicked off the show, fascinating to see this move. We were almost exactly at 3,000 this time a week ago on the show. 3,005 to be precise. Coming in to start the show, 37.89, up a whopping 784 handles. Man, that is music to the ears of a lot of ETH bulls. I see some folks in the chat talking about ETH Ferrari. Sure, why not? If you're going to have Shiba Lambos, why can't you have an ETH Ferrari? Maybe you have an ETH Lambo too if you prefer a Lambo. Or pick your poison, whatever you want. A Porsche, you want a McLaren, whatever your dream car of choice is. Throw it in there. But ETH off to the races. We were just saying on the futures rundown last week that ETH had pretty much erased. It was still down slightly. I want to say 2 to 3%, but it had erased most of, if not all, of its losses for the year. And we said if it keeps up on this pace, ETH might finally actually turn green on the year. Lo and behold, that is exactly what we have seen now, listeners. ETH is at this level is up about 12% year to date. Man, that is welcome news to a lot of our listeners out there. I know we had a question flowing through in the chat. Oh, looks like BZ Tokyo beaming in from across the seas to Tokyo. What time is it over there? Saying, so is Ethereum going to be hitting all-time highs soon? Question for the show. You know what? Let's dig into the skew and the vol a little bit. That might give us a little bit more insight into what the options market is predicting right now. But given this move, it is hard to say. And man, that is just so wild to say out loud. For the longest time, ETH has been the whipping boy of the crypto space. We've had so many guests on this show, listeners, obviously for years now, coming on and just talking up ETH, talking up ETH. ETH was the darling of most of them out there. They were waiting for the flippening when, of course, ETH was going to take over from Bitcoin, take the number 1 spot. And then, of course, over the last year and a half, I think it's fair to say a lot of that enthusiasm waned, to put it mildly, out there. And people were jumping ship for competitors like Solana that was taking a lot of the oxygen in the room. And then just in the last, not even 2 months, month and a half, maybe if you extend it really 2 months, we've started to see this just aggressive move. ETH has pretty much doubled. We were at about 1,800 back on May 7th. Of course, the nadir for the year back on April 9th was right around 1,400. So it has more than doubled from that level. But even a month later, May 7th, it was still hanging out at 1,800. Since then, north of 3,700, more than doubling. And of course, a nice leg up from just July 8th to now, 2,500 to about 3,700. So again, all this talk of stable coins, a lot of that action maybe potentially going up on the ETH platform. Let's see, all-time high for ETH. I do believe it's around 4,600. Yeah, right around 46 and a half, which was set back in the halcyon days of November 13th of 2021. Can ETH threaten that? This momentum, if you had asked me a month ago, Can ETH even erase its gains, or I should say its losses for the year? I would have said, no way. It's off 50%. It underperformed last year, and instead of catching up this year, it lost 50% of its value on top of that. It seemed like the end was nigh for all things ETH. Just looking at a lot of the sentiment of a lot of our guests out there, it didn't seem like there was a lot of love for ETH, and that worm has turned markedly in the last month and a half specifically. So now, if you ask me, given the sentiment, and again, we'll crunch the numbers in a second, but you're not talking that far away anymore. You're talking less than about 850 handles or so to get to a new all-time high. Can ETH do that? It moved nearly 800 just this past week. So yes, it definitely can. Personally, I'm not just talking my book. I do have some ETH in my back pocket, like I know a lot of you do as well, so I wouldn't mind a new all-time high out there. But I do think if you had asked me this 2 months ago, I would have laughed at you. I would say we have to get flat for the year first, and then maybe steal a march on Bitcoin and on Solana and everything else that has been taking ETH to the woodshed for the better part of the last year and a half. And now, just making up for lost time aggressively. That this move, I don't think anyone had it in their bingo card for this year. A lot of people are happy to see it, though. Let's get out to the numbers for this, listeners. Weekly vol, it's been spicy for a while in ETH. No surprise there, it's moving. It was at a 70 last week, almost a 75 this week, 74 and a third. So again, if you're looking for some premium harvesting opportunities, obviously a lot more bang for your buck in ETH right now. Underlying, obviously moving quite a bit more as well. Chances of getting something taken away from you are higher, but then again, you're getting paid for that. So just something to bear in mind. If you're looking at Bitcoin saying this roughly 35, 38 vol, not exciting me. ETH vol says hello. 30-day vol, 66.8 on the show last week, 68.6 this week. So continuing to tick up. Going out to where the hodlers hang out, literally unched, which is weird. 65.3 a week ago, 65.3 this week. So no evolution where the hodlers are hanging out, which is interesting. But let's go to the realm of the skew. Sometimes the hidden mysteries are hidden in the skew, listeners, for a reason. The weekly skew last week was literally flat. There was nothing being priced in. This week, positive 3.5, which is interesting. And again, getting a little bit juicy. Obviously, we've seen ETH get a lot juicier, but still starting to show maybe a modicum of upside sentiment out there for ETH. Again, I think a lot of our ETH heads in the chat and in the listening audience would love to have that skew on the weekly front be a positive 25. Not quite there yet, listeners, but it is moving in the right direction. Let's just go back and check really quickly, listeners. How high, how juicy did that skew get back when things were looking at its apex? And it seems the apex coming around Sunday night, and the weekly skew got up to about a positive 9. So again, that is nothing to sneeze at out there. Not the juiciest we've ever seen the weekly skew, but again, something, and it's still hanging out at about a positive 3.5 right now. The monthly skew, the highest it got was actually on Monday, all the way up to about a positive 6, which is not a small number for the monthly skew. It was a 1.25 positive on our show last week, and now coming into the start of the show, it's down to about a 4.25. So it's given up some of that upside out there. But still, again, so earlier this morning, things were looking a little bit juicier from a skew perspective. 4.25, though, still nothing to sneeze at. Again, showing us that the bias, the interest, the concern, call it what you will, is to the upside right now for obvious reasons out there. And then let's go out to where the hodler is hanging out. 6-month ETH skew out there, listeners. Positive 1.75 on the show last week. Positive 2.7 right now. So again, just given the impetus, the market action we've seen of late, and this skew number, again, the skew is not earth-shattering, but mix all that into the heady stew that is ETH right now. And you ask me, do I think it's viable for ETH to hit a new all-time high? I'd say certainly yes. It has been just a wild couple of weeks out there in ETH, let alone a couple of months. So yes, we certainly can see that. What also has been wild, of course, is Circle. We didn't even get a chance to get to this with our guest earlier today. You remember last week, listeners, when I brought up Circle, I wish you could have seen it. This was an all video show. Bill's eyes got very wide. He almost fell out of his chair, and he immediately started hitting bids on some puts out there. I have to admit, I may have sold a put or two myself out there last week. I know a lot of our pro members did as well. There was just a lot of premium to be had. Of course, Circle went on the rampage since then, rallying, of course, on the heels of this Genius Act and all this stablecoin legislation. Got up to 239 almost. Did it hit 240? Yeah, it up to 245 actually on Friday of last week. 239 on Wednesday, 245 on Friday. Selling puts in the 195, which I think is where Bill was. I was on around the 190 strike. Those have already gone the way of the dodo. You were getting paid many dollars to do that, listeners. It was a very attractive level. Again, don't just hit puts willy-nilly. Be judicious. Use sizing. Maybe sell spreads to keep your risk mitigated. But that said, it was a very attractive bit of risk premium to harvest out there. Circle, maybe those puts going to start looking a little bit juicier again. It was 222.5 when we kicked off the show. That puts it up about 24 handles. It has given up 7 handles exactly since we started the show. It is 215.5 right now. My goodness. So it's still up 17 handles on the week. But again, you could see why some of these puts are perhaps a wee bit juicy. This thing swings 10 handles at a clip like it's going out of style. Also, putting up some numbers out here. Not quite IBIT numbers, but pretty impressive nonetheless. 209,000 contracts on the tape today. That's actually kind of light. The ADV is 347. That's up 46,000 contracts from this time a week ago. So obviously a lot of people heard that show and decided they want to sell some puts out there in Circle as well. Who can blame them, listeners? Things were, I think, to put it mildly, a wee bit juicy out there in terms of action right now. By the way, hitting a 52-week low in the vol and Circle right now. So bear that in mind. Even though those puts are juicy, the vol is starting to get a little low. So now low for Circle. 30-day vol is still an 88. So you're talking a lot more than, let's say, an IBIT. But just something to bear in mind. Coming in a little bit. You're not getting quite as much juice as you were a week ago. That's down 5 points from where we were this time last week. And really quickly, what's the big dog in Circle today? It's expiring on Friday. It's probably a call. The question is what strike, and it's the 445 calls. Going up 19,000 times this week, listeners. So folks buying some upside. And they were trading for about 15 cents all day. So you can get all the 445s. 19 cents? That's... Wow. Okay, you know what? Sold to you. I think I feel fairly safe selling a 445 call. You won't do it naked. You got to buy something against it. Maybe a Meteor at the money call or a stock or something. But 445 calls? This goes into the what are we doing category here, listeners, and also maybe a candidate for, we like to track these for our trades of the year, and that one certainly potentially looking like it might be a little bit juicy. But let's keep on rolling. Is Solana looking juicy? Well, threatening a 200 handle, listeners, right now, listeners. 196.11 when we kicked off the show. That's up from 164.18, up nearly 32 handles on the week, listeners. So things are rocking out there in Solana. Let's see, did we hit the 200 level earlier this morning? We got up to 197.17. So we flirted with it, almost kissed it. They're retreating back off a little bit right now, but then again, the day is young. We could get back up there at any moment. So up 32 handles. I think a lot of our listeners will take that. XRP, what can we say about XRP? 294 on the show last week, 361 this week, up nearly 70 cents on the week. Just a wild week out there for XRP fans. Bill's wife included. It's going to be a party in the Ulibarri household this week. Doge, 19.8 cents last week, 28 cents this week. Up nearly a dime. So maybe those Doge Lambos are sneaking up in the rearview mirror. Litecoin, 95.39 last week, 117.34 this week, up nearly 22 handles on the week. Cardano, 89.9 cents this week, 73.6 cents last week, up about 16.3 cents. Polkadot, 397 last week, double this week, up about 58 cents. And everyone's favorite, your beloved Shiba Inu. Is there some Lambos in your future? Maybe a million zeros, 1.3 last week. This week, a million zeros, 1.56. Whew, that was a lot of talking and a lot of living being done on the crypto rundown today. Hope you folks had a good time. I want to thank our guest, Brandon Mulvihill from Crossover Markets. Again, Seems like maybe there are some opportunities to trade crypto a little cheaper, a little bit more efficiently in the future, which again, not a bad thing for anyone listening to this show. Check them out over there at crossovermarkets.com if you want to learn more. And of course, while you're checking things out online, make sure you check out our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. Tell them we sent you. They'll be very excited to hear from you. And again, you have no excuse. That GUI is completely free for you folks out there. And they're adding all kinds of cool stuff like Circle all the time and everything. So the more the merrier. Next week, even more cool stuff. amberdata.io, the place to go to kick the tires and light the fires. That's going to do it for us on the Crypto Rundown. Not going to do it for us, though, on the network today. Back again in about a half an hour. So if you're hanging out in the live, just chill. We'll put some fun stuff in there. And then we'll be back in about 30 minutes to break down this wild day. We were just saying on the option block, is it a completely upside down day? An upside down market could open, possibly have finished at the top of the top 10. Did it dominate the options market for the entire day? Only one way to find out. Check out the Hot Options Report coming at you live in a little bit if you're hanging out in the Pro, theoptionsinsider.com/pro. On demand for the rest of you. Speaking of the Pro, we'll be back here tomorrow with our good pal, Mr. Rich Excel, taking on all comers. He'll field all your questions. He's a great one to tackle. FX, metals, crypto, you name the asset class, he'll weigh in on it. So get your questions ready. Start sending them in now if you haven't done so already. Those Pro Q&As with Rich, always popular. Get them in now. We'll be doing that tomorrow on the Pro Q&A. Wednesday, of course, our double dose of the Options Bootcamp, which is our educational program, and a lot of you listening to this show should probably be checking out, as well as, of course, the Futures Rundown, where, spoiler alert, ETH has been featured for a long time. Not so much anymore because it's up on the year now. Who knows? If it keeps this up, it might start making our top 5 on the year, which would be just a renaissance for ETH of the ages. I look forward to hopefully discussing that one day soon. Then, of course, Thursday, the option block, and This Week in Futures Options, where we also touch on some Crypto Friday, volatility views, and we come back one final time for our pro folks talking unusual activity on options oddities. Then we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.